Hello and welcome to earnings call, the preview for quarter four. It's a critical quarter for more reasons than one, and what will come out from the various sectors will probably pave the way of what the markets do in the near and the medium term. I'm Neeraj Shah. Okay, let's get straight to the point and talk about the earnings. We'll of course analyze all of the sectors individually in greater detail as to what is it that they are likely to do. And to do that, while we have our research team in full strength, we also have a very special guest, Manishi Raychaudhuri, MD and Head of Research at BNP Paribas Securities, who joins us right now live on the show. Manishi, good to have you. Thanks so much for joining in. Manishi, we'll talk about individual sectors in greater detail, but the belief ahead of the earnings is that the quarter may not be as great. In fact, there is a lot of pessimism. What do you think broadly for the index companies or the companies under your coverage? You think the bottom line growth or the top line performance would be disappointing at large?
Well, it depends on what expectations the market is starting with. I can give you the numbers. As far as BNP Universe is concerned, we expect about 17 to 17.5% growth on a year-on-year basis as far as the revenues are concerned. At the EBITDA level, it will possibly be about 12.5 to 13%, and at the earnings level, it could be somewhere close to 11 to 12%. So that implies that there is a degree of margin compression that the BNP Universe could face. And the interesting part is that if I were to strip out commodities out of this, so if I were to strip out metals and mining or let's say oil and gas from here, then the earnings growth actually jumps up sharply to somewhere close to 25 to 27% for the BNP Universe. Which essentially means that commodities, particularly metals and mining, are likely to drag down the entire average. Now, having said that, there are a couple of sectors where the bottom-up forecast from the BNP analysts are quite high. So, for example, in pharmaceuticals or in banks, we are seeing almost 50 to 60% earnings growth on a year-on-year basis. But that's really due to a combination of low base and stock-specific one-time reasons for certain large stocks in this sector. So, all in all, I think this is not likely to be a bad quarter if our expectations come correct. It will possibly be similar to the previous quarter, that's the third quarter. And one interesting fact I would like to mention here, if you look at the consensus EPS estimates as far as Sensex is concerned, and this, I kind of stress on the point that this is consensus EPS estimate, this is not BNP. These consensus EPS numbers have actually increased slightly over last quarter by about 1 to 1.5%. It's a small increase, small upgrade in estimates, but the important point is that this actually is a departure from the trend that has been set over the last 5 or 6 quarters. So we may be close to an inflection point as far as the direction of earnings estimates is concerned.
One certainly hopes so, Manishi. Let's talk about individual sectors in greater detail, and let's start off with IT. Disappointing results from Patni notwithstanding, the markets are eagerly awaiting for Infosys to announce its March quarter numbers, and more importantly, guidance for FY13, which will come up. What can one expect from the IT sector? Also talk about Infosys in greater detail. Sunita Nagpal is here to take us through the details. Sunita, March quarter is traditionally the weak quarter. Do you think there could be some more color this quarter around, and is there room for disappointment as far as the INFI guidance is concerned?
Absolutely, we are expecting the March quarter to be weak, and this is likely to play out in the Q4 earnings, and we are not expecting much kind of changes as far as FY3 expectations are concerned from IT sector. Top tier companies are expected to post roughly about 1% to 2.5% kind of sequential growth in dollar revenues. We are expecting Wipro and HCL Tech to post the best performance in this quarter, while Infosys is likely to grow only at 1%. Margins could come under pressure because this is the quarter where currency movement has not been conducive for the sector. Also, the volume growth will be sluggish, so that will play out. In the mid segment, we are expecting Hexaware to announce the best number, while Tech Mahindra will be the worst performing as far as mid-tech IT is concerned. Main focus will be on guidance of Infosys. We are expecting Infosys to guide anywhere between 10 to 13% in dollar terms revenue growth for FY13, while the EPS guidance will be from expected to be 165 to 168. Remember, the market is already discounted 170 rupees EPS for FY13, so anything below 168 could be seen as negative from the company side. Some brokers are also expecting a special dividend from Infosys. That will be watched very, very closely. Other than the focus areas will be hiring guidance, salary hikes to be given in FY13, and also what is the final outcome from the clients' IT budgets for 2012. These things will be watched very, very closely as far as IT sector is concerned.
Okay, thanks a lot for that, Sunita. Manishi, what's your sense from what the poll suggests? That the market believes that there will be 2 to 3% QOQ growth for the top tier companies. You think this quarter would probably belong to some of the mid-tier companies like a Hexaware, Mindtree, or a couple of others?
You see, as far as the numbers are concerned, it may. I can share with you that our own estimate is for the large cap companies, the year-on-year earnings growth would possibly be somewhere in the range of 15 to 18%. And yes, the QOQ top line growth or earnings growth would be in that range that you mentioned, so somewhere close to 1 to 2%, etc. But the bigger point and the broader point in this case is that as far as the longer term is concerned, it's these larger companies which are able to garner clients' mind share and get new accounts into their bags. So in this sector right now, there's no way other than playing the larger companies. So we are not really venturing into the smaller cap or the mid-tier companies in this sector.
What do you think will post good results? And if so, post the earnings season, what is it that you find favor with, Manishi, in the tech space?
So we are still siding with the large caps, that is Infosys, Wipro and TCS in that order. So the top two favorites would possibly be Infosys and Wipro.
Okay, that's the word on IT. The other sector, Manishi, which will be in focus and which sprung a slightly positive surprise in quarter 3 was banking. What do you expect banking to do this quarter around? I mean, do you think the yields performance will essentially be the one that will have the impact on bottom line, or could there be a surprise or two?
Well, it's likely to be a combination of both net interest margins and asset quality. Broadly, we expect the performance of the banking sector to be similar in terms of the characteristics compared to the third quarter. And by that, I mean that the private sector banks are likely to do better than the public sector banks. In case of the public sector banks, I think there would continue to be a concern on the asset quality, which would perhaps get reflected in the numbers of some of them. And on the other hand, the private sector banks are likely to do better both in terms of in terms of asset quality and the net interest margin performance. So our preference clearly lies for the private sector banks.
Okay, which of these banks, Manishi, do you think could actually perform well in the quarter coming in terms of how the earnings performance would be?
I would think that possibly Axis Bank, HDFC Bank and ICICI Bank, possibly in that order. HDFC Bank, and for that matter that entire HDFC family, has been a very stable performer, and I don't expect a major departure from that trend. Some of the second tier banks could also surprise positively. The name I have in mind is IndusInd Bank.
Okay, and lastly, Manishi, very quickly before we take that break, State Bank of India in particular, I mean, you think the asset quality deterioration could worsen in the quarter, or is there room for some positive surprises there?
I think for State Bank of India, asset quality may not worsen further. In fact, we are expecting the earnings growth for State Bank of India to be quite significant, possibly higher than the banking sector average. But as I mentioned right at the beginning, that is purely because of one-time effect. Both the pension provisions and the credit cost, they're likely to be lower in this quarter than in the previous one. So I think State Bank of India could be a bit of an exception compared to that public sector banking pack.